Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and we're starting to head into the holiday period. We got past the FOMC yesterday. Had some movement to it. I think that's going to slow down though as we get into the holidays and certainly in the next week. So, the suggestion that I've been giving to folks with respect to trading the holiday tape is that you've got to take what the market gives you, meet your goals, and then move on to the next day. You can't overtrade it. You can't try to do too much with it because it'll pick your pocket. If you keep going to the well too often, it's going to pick your pocket. Both the Bulls and the Bears yesterday had an opportunity to really get things going. You had an initial, move up into the 14.5 area by the Bulls. The Bears then took that basically straight down, did as low as 95.75. They found some support and they brought it right back up. The weekly pivot this week is 2018-30, and at this point we are, hovering around that area. GDP just came out, and it's certainly moving gold, but it's not really moving the mini all that much. So at least not yet. So we are trading dead bang on the weekly pivot. So where we go from here becomes fairly interesting. If the weekly pivot wants to be support, then you could see that slow kind of walk up rally. If you want to call it a Santa rally, that's fine. Although, anytime the market goes up at all during this period of time, they go up Santa, it's Santa, and then it goes back down, and then everybody forgets about it. So I try not to characterize it. It's so much easier just to trade what you see. As long as we remain below the mid band, which is up at 53, 53 half essentially, we remain in sell rallies mode. The highs today coincide with the 9-day simple moving average, 23 area, and if that continues to be resistance, then the bears will have an opportunity to come down and continue to test that 96 area. If they're going to make a lot of noise, they need to break down below that 91 and really go take a look at some of these lower levels. Seasonally though, that's a little bit counterintuitive. Seeing a slow rally up to the mid band, which would be 40 handles worth of rally, just about 35 to 40 handles, and have that fail up there, may be the best case scenario for both sides. But right now, I am taking a completely neutral stance, as we are sitting right on the weekly pivot, and I want the weekly pivot to show me the way. If it wants to be resistance, bears control the tape. Wants to be support, bulls control. That's worked really well throughout 2015. The weekly pivot and the monthly pivot have really shown the way as far as whether you need to be focused on buying dips or selling rallies. All right, everybody have a good one. Follow us on Twitter at Princeton Trader. Come check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well.